What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, we welcome you to subscribe. Otherwise, you can support our channel if you just like, share, comment down below. It helps our content get out to a wider audience, and we greatly appreciate the support. For today's video, I really wanted to go over some information to really help you guys navigate the whole journey of getting access to credit. And this is very, very important. So definitely tune into this video because I'm just going to be sharing some of the things that will enable you to get a higher chance of approval. And so what I've seen recently with a handful of subscribers is I guess this tendency to immediately after we drop a video to run and go apply to a particular institution, right? And that's not what we're saying to do. When we put this information out, it's just giving you data points on different financial institutions. So we're not promoting any of these products. We're not telling you to go apply immediately after watching the video or even without watching the full video, right? And at the end of the day, you also are going to want to do your own due diligence as well. So one of the important aspects, number one, when going about getting funding is understanding what your profile is and where your profile fits in terms of that institution's business model. Now, a business model is basically like a very defined objectives in terms of who that particular institution is targeting. When it comes to financial institutions, and the way I'm referring to as business models is who are the target customers of that particular credit product or that particular institution. And that's really, really important to know where you fit in so that you're not applying to credit products or with financial institutions where you're not a good fit for that particular credit product. And that's very, very important because what I would see a lot is individuals applying for at places and at for specific products where you have no business applying to, right? So the business model could be targeting customers who are rebuilding credit, new to credit, as the video I dropped earlier on the Jasper MasterCard. They're really targeting you know people who are new to credit and professionals with steady incomes, right? Not rebuilding credit, not, if you have derogatories and stuff like that. Not even if you have like an established credit profile. So understanding the bit where you fit in, right? So businesses will or financial institutions will target, like I said, rebuilding, fair, new to credit, prime credit, etc. Right? So understanding where you fit in, right? If you have a bad credit profile, you're not going to be applying for Chase, American Express, things like that, right? That would just be a waste of a credit inquiry. So just understanding where you fit in terms of that particular institution's business model is very, very important, and it will save you a lot of time and unnecessary denials. So just keep that in mind. Understand the hierarchy within a particular institution in terms of the products that they provide. So for example, let's say a Visa signature, you could usually interpret that as, being a much higher underwriting criteria because they start at higher minimum starting limits. So just keep that in mind. You're not going to be wanting to apply for the high end card if your profile doesn't really fit the bill for that. So just that's one of the most important things. The next important, this is probably the most important thing, is applying for credit products or applying for any type of credit in general with derogatory items on your profile. Collections, repos, late payments, all of that stuff is going to hinder you. Not to say that you can't get approved with some of that stuff on your profile, but just knowing that you have that, you should all by default kind of understand that your chances are going to be diminished, right? Because especially when it comes to automated credit decisions, because there's not much room for interpretation, right? They're not, they don't really, those automated decisions don't care if that late payment wasn't your fault, or if it was from 4 years ago. Like, it just sees a late payment, that's just an indicator of higher risk, and that's going to diminish your chances of getting approved. So before you even jump out and try to apply for anything, you got to make sure that you address those late payments, those derogatory items. Get that situated first before you even consider applying for anything. Now, there are ways of still being able to get approved, but you're going to, if you have derogatory items, you might want to focus more towards like a manual review versus an automated decision, because with a manual review, you'll have a human looking over your profile, and they have the ultimate say in whether to approve or deny you, versus an automated decision. Although there are reconsideration lines and things like that, in a lot of cases, the analysts on the other end, not always have the authority to go ahead and push your approval through. So just keep that in mind, right? You're going to want to address derogatory items. If you have multiple derogatory items, then you shouldn't really be applying for anything. You're likely to get denied for practically everything, especially in this current climate where even people with good credit profiles are getting denied. So just keep that in mind. Derogatory items are really going to get you out the game at the very beginning. So definitely make sure you address that first and foremost. The second thing, or the third thing rather, I wanted to address is having the data on your credit profile to justify the approval, right? I see a lot of times excessive authorized users with very little primary accounts. So if your authorized users account for much of your credit score, or it's holding up your credit profile, then that's not really going to help you in the long run when it comes to getting approved for primary accounts. And this is just a public service announcement, right? And coming from someone who actually offers trade lines and things like that, I just wanted to put it out there. I've done videos on this previously, but those shortcuts that worked years ago, when you could just add trade lines and then get the same type of approvals, that's not working anymore, right? A lot of lenders have accounted for that. What some will actually do is rescore your profile just based on your primary accounts. Because you got to remember, at the end of the day, an authorized user is not your account. You're just piggybacking off of that data. So yeah, it'll manipulate all the different components of your credit profile, but your credit score and underwriting are two different things, right? The underwriters know that you're not legally responsible for those authorized user accounts, so it doesn't really take into account like your credit worthiness, and underwriters and lenders are already hip to that. So just thinking that you're going to game the system by adding authorized users and then trying to get approvals is not working the way it used to. So definitely make sure you're building your primary accounts. Don't try to skip steps or try to fast forward it by just adding a bunch of authorized users, because that's not really helping nowadays. The next thing I wanted to talk about was recent new accounts. So recent new accounts is going to trip you up, rather whether you have good credit or if you have bad credit, right? And the reason why is with a lot of new recent accounts, when you go to try to get a subsequent accounts, they're going to see these new accounts, and the banks are going to wonder, hey, you just got X amount of dollars from this institution, and now you want X amount of dollars from us, and you just got this account, so what do you need all of this money for, right? And then also too, you haven't shown yet with that new account how you're going to manage it, right? That's one of the biggest signs of credit seeking and high risk, when you're trying to get a lot of money from a lot of different institutions. Even though you may be stable, that may not be the case for you, but that's just the way financial institutions look at it. They look at it like you're desperate for money when you're applying for, or rather opening up a lot of new accounts in a short period of time. That's why you just want to let your accounts garden for at least 6 months before you start to apply for subsequent accounts. And that's just my rule of thumb, but a lot of other people use that rule of thumb too. Definitely let your accounts garden for a certain period of time, generally 6 months. Before you apply for another account, you're going to want your other account, your youngest account, to be at least 6 months old to ensure the highest chance of approval. Now, that doesn't mean you can't get approved, but once you have like a certain amount of new accounts, you're just going to get tripped up the more you try to add. So just keep that in mind as well. Next, I wanted to talk about utilization. So you have your overall utilization, but then you have the utilization within each account. And I'm talking about revolving utilization. So I guess, one of the rules of thumb is 30%, maintain, that across all of your accounts and overall, So really, you want to be at 9% or low across the board and within each account. That's when you're at 9% or lower, you're usually going to maximize the utilization category. There is a catch 22 though, right? Because you will run into what's called the number of accounts with balances. So let's say you have 10 accounts, right? You're not going to want to have all of those accounts at 9%, right? Because then you have too many accounts with a balance on it. So ideally, what you would want to have is, let's say you have 10 accounts, you're going to want to have probably 8 of those accounts zeroed out, and 2 of those accounts you could keep with a balance of, 9%. But you don't want to have all of your accounts zeroed out, and I'll do another video on why that is. But the way the utilization category is comprised in terms of like the FICO scorecard, it's kind of like, I would say, like a bell shape, right? So if you have zero balance, you're not hurting yourself, but you're not maximizing that category. So you're going to want to have at least an account with a balance between a dollar, like a dollar, but less than 100. So between $1 to $99 reporting on that particular account. And you have to also take into consideration like the utilization, right? So if you have a $300 credit card limit, you're not going to keep a $99 balance, right? Because then you'll be at 30%. So just make sure you're balancing that right, so that it's less than 99 or less than 9%, but it's not zeroed out, right? So you're going to want to have a little bit reporting, and I'll that's a whole nother video, but I'll explain that. But yeah, so your utilization, you want to keep that low, and then another thing too, if you do have derogatory items, you're not going to want to do automated credit decisions, because automated credit decisions leave very little room for interpretation, right? They're going to take your report literally, right? So if you have any derogatories, if it's from a couple years ago, it's going to treat that the same as if you had a late payment, 3 months ago. So making sure, if you do have derogatories, you kind of want to stay away. You're better suited with a manual review, someone who could push the application through and can consider other factors. So, if you have a strong income and you could, demonstrate that through a manual review, or you have, high income reported on your tax returns or anything like that, you're going to want to play that play that to your advantage, right? Really try to demonstrate that type of information if you do have derogatory items, because it's just something to I would say something to overcome maybe the late payment or maybe the collection, or what have you, right? You just have supplemental information to give them a little bit more insight into the type of borrower that you can be. So just to recap all of the advice I wanted to give you: understanding where you fit in within a particular business model of an institution or within the credit products themselves, making sure that you're clear of derogatory items before you start applying, letting your accounts garden for at least 6 months. So you're going to want the youngest account on your profile to be at least 6 months old before you start putting in more applications. You can still get approved if it's less than 6 months, but it's just going to be, you're just not going to have the highest chances. And then having too many accounts with balances on them, you're going to want to keep the utilization 9% or less. And then if you do have derogatories, stay away from automated credit decisions and focus more on manual reviews. So that's basically all I wanted to go over in terms of how to position yourself. And remember, we're not telling you to apply for every single credit product that we review. Do your own due diligence and put yourself in a position for the highest chances of success, right? If you have a poor credit profile, don't just start triggering, applications hoping for something to stick, because chances are it's not, especially in today's environment with the whole, current economic situation going on right now. Um, you know, Credit approvers are becoming harder to come by, so you're going to want to do everything that you possibly can to position yourself. And last but not least, having patience, right? I noticed there's also a reluctance to try to build, or trying to create shortcuts and skip steps. That's just not going to cut it anymore. You're going to have to go through the motions of building your credit, building your primary accounts, and then just being patient. So that's all I wanted to cover for today's video. Until next time, y'all take it easy, and we'll talk to you soon. Peace.